Kia ora, Ian, and welcome everyone. I'll open us. On behalf of Community Housing Aotearoa, we're very pleased to bring you this webinar today with Dr. Kay Saville-Smith and Ian Mitchell. Join me in karakia. Whakataka te ho ki te uru, whakataka te ho ki te tonga, kia mā kina kina ki uta, kia mā taratara ki tai, e hi ake ana te atakura, he tio, he huka, he hohu, tihe Mauri ora.
You're right. Today's webinar summarises the results of our project investigating the changes in the structure of the private rental market over the last 27 years. For those who do not know me, I'm Ian Mitchell from Livingston and Associates, and for this project we partnered with Kay and Nina Saville-Smith from CRESA. Kay will be presenting on behalf of CRESA today. We would also like to thank BRANZ for funding this project via the Building Research Levy. In a second, we'll just change the first slide into, there we are, team. Our overall goal was to investigate how the housing system had performed relative to providing affordable rental stock for low to moderate income households between 1996 and 2023. The project included a number of stages. We investigated trends in the intermediate housing market. We undertook some detailed analysis of the structure of the private rental market and affordability outcomes between 1996 and 2023. Kay and her team examined policies and programs designed to stimulate new build supply, including granny flat provisions and build-to-rent policies. She also researched the societal and economic impacts of housing stress and undersupply on housing precarity. The results of the project are presented in 6 reports which are available on BRANZ's website and include a standalone summary. So just to talk a little bit about the background of this project and why we presented this topic to BRANZ as a research project. It really comes out of a number of areas that we saw. First, the demand for affordable housing supply is exceeding supply, and it's getting worse. We're increasingly seeing owner occupation out of reach to a large number of first home buyers, which again puts increased pressure on the private rental market because you have strong growth in the number of private renters looking for dwellings. There's an increased proportion of households who can't affordably pay the market rents, and also restricting the supply of affordable housing is the low returns relative to development costs, which limits the construction or development sector's capacity to grow supply. And research that Kay and I have completed under the National Science Challenge showed that some of those key housing policies, such as the accommodation supplement, although they provide relief to individual households, don't really only have a limited impact on overall market outcomes, and would need to expand by a factor of 4 or 5 times to have a really significant flow through on market outcomes. There's also, over that period, there's been the ebb and flow of governments and policies and support, which has limited the growth in affordable rents. And there's also a disconnect between different participants in the housing system. So just in terms of a little bit of background, over the time frame, number of households in New Zealand increased by increased by just over 40%. The rate of owner occupation fell by just under 5%. The number of owner occupiers went up by 31%, and the number of private renters went up by 140%. So what does this mean? Well, one of the drivers behind this is the number of households which are being unable to afford to buy. And for those of you who are not familiar with the concept of the intermediate housing market, it relates to those private renter households with at least one person in paid employment who are unable to affordably buy a dwelling at the lower quartile house sale price in their housing market. And the trends in the number and relative size of the intermediate market reflect the pressures within the housing system. Changes in the size of the intermediate market provides an indication of first-time home buyer affordability. And as the intermediate housing market grows in size, competition for rental properties increase, making it harder for low to moderate private renters to be able to find affordable rental housing. So when you look at the outcomes here that we identified between 1991 and 2025, the intermediate housing market increased from 83,300 private renters, or 7% of all households, up to 286,400 households, or 15% of all households. The intermediate market peaked in 2023 at 307,900, or 17% of households. The decline between 23 and 25, was a result of flat house sale prices, increase in household incomes, and a fall in mortgage interest rates. Despite the recent fall, the overall trend between 91 and 25 has resulted in an increase in the proportion of employed private renter households who are unable to affordably buy a dwelling at the lower quartile house price. And this has increased the pressures within the private rental market for households looking for dwellings. Over the same time period, Auckland's intermediate housing market increased from 9% of all households in 1991 to 22% in 2023, before easing back to 19% in 2025. So if we look at what's driving the growth in the structure of the private rental of the intermediate housing market, in this case, a slightly shorter period between 06 and 25, population growth increased the intermediate housing market, increasing the total number of households in New Zealand by 52,000. There's changes in the rate of owner occupation added to the increase by another 59. Mortgage interest rates fell over this period, which reduced the size of the market by 49,800. Higher dwelling sale prices resulted in an increase of 161,000, and growth in household incomes decreased the size of the overall market by 143,000, to give an overall change of an increase of 81,000 private renters. The next series of slides relates to the analysis we undertook in terms of changes in the structure of the private rental market. And we're only really giving you quite a highlight of the analysis that took place here, because these slides relate to quite a data-rich report, which includes numerous slides, tables, and different maps around changes in terms of the structure of a private rental market between 1996 and 2023. So we're just really trying to give you a good highlight of what's happened. And for this analysis, we divided the census data which we used was divided by household income and rental quintiles. So between 1996 and 2023, the proportion of households and proportion of private renter households in rental quintile 1 fell from 58% in 1996 to 41% in 2023. In absolute numbers, the number of quintile 1 rental properties increased from 40,696 to 46,300 in 2023, an increase of 5,800 or 14%. This is significantly lower than the growth in total private renters of 140% over the same time period. In rental quintile 2, the private rental market share grew from 67% in 96 to 91% in 23. In absolute numbers, private renters in quintile 2 rentals increased from 31,600 in 1996 to 99,780 in 2023. Rental quintiles 3, 4 and 5 followed a similar trend. There's a change there. This slide shows the private rental market share of rental properties by income quintiles and rental quintiles in 1996. Rental quintile 1 is in the front row along the x-axis, and the income, sorry, yeah, and we can add in the results for 2023, and you can see that between 1996 and 2023, the proportion of households who were in income quintile 1 and rental quintile 1 fell, whereas in rental quintile 2 they increased, and that trend continues across all of rental quintile 1 along the x-axis and followed a similar pattern. We can also look, so what we're seeing is that the private rental market, in effect, hasn't kept the growth of low-cost rentals at the same pace as the increase in demand. So when we look at what affordability outcomes are out there by income and rental quintiles, we can look at the proportion of private renter households who are paying more than 30% of their gross household income in rent, which is referred to as housing stress. So these results relate to 1996. So in 1996, private renters in income quintile 1 have the highest proportion of stressed private renters, 97% overall. And as incomes increase, the proportion of stressed renters falls, whilst those in the higher rental quintiles have proportionally more stressed private renters. And we can add in the result in the 2023 statistics. And you can see the outcomes for income quintile 1 were similar to 1996. For those renters in income quintile 2, the outcomes had deteriorated in rental quintile 2 and 3 properties and improved for those in rental quintile 1. Renters in income quintile 3 and rental quintile 3 and 4 also experienced an increase in the proportion of stressed households. However, this analysis misses some of the nuances associated with affordability outcomes, and it misses the impact of crowding as an affordability measure. So if we look at just 2023, then when we add in those households, those private renters who were crowded but not stressed to avoid double counting, we can see that particularly in the higher income quintiles, there's a significant proportion of households who have affordability issues, who for whatever reason have decided to crowd to reduce the housing cost pressures within the household. When you look at the income quintile 5, approximately a third of private renters are now either crowded or stressed, whereas only stressed was only less than 1%. In a similar situation for income quintile 4 renters, where approximately a quarter are now either stressed or crowded. The impact is less on lower income quintile private renter households, with crowded private renters adding approximately 10 percentage points to stress renters in income quintile 3. So we can also look, we also looked at the variations in the private rental market between 1996 and 2023. They followed a similar trend with falling rates of owner occupation and the private rental market increasing at a faster rate than the overall growth in households. We did note that the timing of some of the underlying trends varies between the regions, and it appeared that Auckland may have experienced a deterioration in affordability prior to 1996. This slide demonstrates a change in the proportion of private renters as a percentage of all private renters by rental quintile between 1996 and 2023. Auckland's private renter outcomes followed a similar pattern to the national average, and we can see there was a fall in the proportion of private renters in rental quintile 1 in 2023. As we add in the other regions, you can see that the gold columns being Wellington and the red being Christchurch. Wellington followed a similar pattern to Auckland and Auckland's private rental market, while Christchurch's private renters maintained a higher market share in rental quintile 1, but experienced a fall in quintile 2 as a proportion of total renters. We can add in Greater Hamilton and Greater Tauranga, and their housing markets followed a similar trend to Auckland and Wellington. Overall, the proportion of private renters in quintile 1 rental properties fell. Again, we can look at what's happened in terms of housing affordability outcomes. Again, we can look at the 1996 outcomes first, and where Auckland, Greater Tauranga and Christchurch had a higher proportion of stressed renters in income quintiles 1 to 3 when compared to Greater Hamilton and Wellington. We add in the 2023 results, and you can see that again the level of housing stress increased, particularly in quintiles 2 and 3, and particularly in Hamilton and income quintiles, Tauranga, for income quintile 3 and also for Christchurch as well. Again, this doesn't show the full picture, and we can consider what happens when we include those crowded, non-stressed households. And we can see again, particularly in the income quintile 5 households, that the proportion of stressed households has increased, and which add 20 to 30% of income quintile 3 private renters are crowded, and 15% of income quintile 4 private renters. Crowded but not stressed households in income quintile 3 added 5 to 10 percentage points to just stressed private renters. So when we looked, I suppose some of the key conclusions following out of this slide is, so from a national standpoint and for key regional housing markets, it would appear that the housing system has not provided an adequate supply of affordable dwellings for low to moderate income private renter households between 1996 and 2023. Kay.
Thanks, Ian. Kia ora tātou. Look, I'm going to talk about a couple of things which will build on some of what Ian is saying, but is particularly looking at pathways to response. And in doing this work, we selected 2 real responses, one in New Zealand, which has also occurred overseas, but also one which is primarily overseas, but is emerging in New Zealand, and that's the granny flats, or the so-called ADUs, or if you're an MB folk, you'll call it a minor residential unit, which is essentially partitioning up existing sections and building small dwellings on those sections, and looking to that to provide better supply into the housing market in general, both ownership and, in fact, rental. And indeed, the new granny flat regulations, so-called, it's not actually formally used that in the legislation, but that's what we've talked about in New Zealand, was very much focused on the idea that it would generally increase housing supply for owners, not so much for rental provision, and take out some of the costs of building additional housing. And it was based on the notion, a correct notion, that the biggest residential land owners in New Zealand are in fact owner-occupiers, and that we could use that land more efficiently. And in fact, we've done in previous research, had a look at what we've called ADUs, accessory dwelling units. And what we found in New Zealand is that there is a huge mess of regulation on a regional basis around building these small units on existing site. And the rules around them, despite the RMA, really come back to stuff that was established before the RMA and are hugely variable. So you can read that report too. But the claims of the new provision was that by allowing small units up to 60 square metres when it was first proposed, and it's now 70 square metres now, would minimise complications in terms of consenting and resource management requirements. And it was seen as reducing the costs to owners, property owners, of producing new dwelling units of about between $3,000 and $6,000, actually $3,500 and $6,000 per unit. So that's seen as a substantial building cost reduction. It was argued that we can do those things without having the regulatory imposition. Still have to meet regulation and standards, but you have a different mechanism to check that people are meeting those, but that you could rely on the industry and the occupational regulation of qualified professionals and the building code of acceptable solutions to deliver good quality housing and diversifying and producing different stock and a more affordable stock. And essentially the legislation claimed that it would benefit seniors, that it would benefit young people who are struggling to get into housing, single parents, single and couple households, only the smaller households, also benefit what are now intergenerational households, coming back to Ian's point about crowded dwellings, by being able to add units to a site, which mean that some of that household can go into these smaller dwellings and others can remain in the main house. And this was seen as having particular benefits for Māori and Pacific and people with disabilities. Now, the issue in terms of the legislation, of course, is that there are no requirements nor incentives to ensure that those new dwellings are accessible, physically accessible. And indeed, because there is not an accepted solution for these small dwellings in relation to things like level entry into showers and so forth, we know that to actually go through that track, the granny flat building permission, if you like, we know that those showers, and every single one of them, will not be accessible because there is no accepted solution. So it's a bit of an issue there. I have different feelings about that, and my views around that sort of vary quite a lot from virtually day to day. So what we had a look at is what's happened overseas. We built on the work that was done some years ago now, and we looked at, does this type of support for minor dwellings actually generate numbers of dwellings? Does it generate interest among owner-occupiers to deliver dwellings into the housing market? Has it preserved building standards? And has it actually preserved or generated secure housing, security of tenure? And has it reduced costs? And essentially, what the international research shows is that it has had mixed results. Three things are notable in it. One is that it hasn't really encouraged owner-occupiers overseas to add dwellings to their owned sites. It has been dominated by property investors, and so property investors have tended to use those, buy up existing housing and then use those sites to add small dwellings to them, with mixed results both in terms of the quality of dwellings, but also the quality of the surrounding areas and the living experience of people living both in main dwellings and in minor dwellings. And in general, what has happened is that there has been significant gaming around regulation, both in terms of housing security, but also in terms of the standard and performance of dwellings. What, however, is also clear is that you can increase the housing stock through better and more efficient use of residential sites. And the issue is not so much whether that can be done, but how it is done, and whether you need to go through a full redevelopment of site, or you can actually add the sort of incremental development of housing within existing sites. So, and I think that both of those are true, but I think that there is certainly opportunities for incremental development, which can still be good quality. And I'll just say on that note, the Gordon Wilson Fellowship, which is managed by the New Zealand Institute of Architects and funded by the family of Gordon Wilson, used to be the old government architecture, who died very prematurely in the late 1950s. They've been funding a scholarship for people to try and look at how we can better use sites, build better, and deliver affordable housing. It's a scholarship which is now in its third year, and the second to last recipients of that scholarship was actually looking at how we can use land lots better. And like the original research around ADUs, the potential is huge within residential sites. So the issue here is about not getting carried away with the idea that all of this is easy, straightforward, and will happen, but rather realize the benefits or the getting good outcomes for it actually takes quite a lot of thought from a design level and from a build and cost and investment level. The second thing that we looked at was the review of build-to-rent research in the context of tenure restructuring in New Zealand. And we looked at that hoping that we would undertake a systematic review. The reality is that we haven't done that. We've done a review of material which has come into the public arena narrative, primarily because, in fact, it is still driven by market providers, investors, and property investment analysts, rather than having a great deal of evaluation. But the first thing I want to say about build to rent, and you often hear this, is that build to rent is not simply building rental houses. We've done that in New Zealand for years, both in the private sector and in the public sector. Build to rents in this terms, although it's somewhat variable around its boundaries, involves institutional investors to build rental properties in the private sector and maintain the operation and management of those dwellings within its rental portfolio. And there's been a number of ways that has developed, usually focused on returns around revenues, but also mixed models which people are looking for, investors are looking for capital gains plus rental returns, and even models where that's been positioned as getting capital returns, but accepting marginal rent revenues. The real estate investment sector has been very, very supportive of this, particularly internationally, and it's emerged in New Zealand as a way of dealing with our tenure revolution and the growth in those seeking rental housing and the fall off of other housing opportunities. So if we have a look at the graph next, which Ian is going to bring up on the screen, essentially what we find is that additional housing and supply has been absolutely dominated by private rent. So that's the property sector. Other landlords have largely fallen off. And the growth of units or houses within the private rental sector has exceeded by far the growth of stock numbers in either at home in ownership or in community ownership or state ownership. The sorts of problems that have drove these: lack of affordability, lack of access, undersupply, so-called poor performance in the existing rental stock and poor management, all of which is true. Despite all that, actually the growth of build to rents has stuttered. And so these two graphs show on your left, I hope, might be your right, but in the bar graph, you'll see the United Kingdom 2012-2020. So after a bit of a splurge and a great growth in 2017-18, actually it hit the wall in 2019, resumed a little bit in 2020, but is also falling back now. And you see a similar pattern in the United States. So there are, again, claims that this private investment through build to rent will allow us to expand rental stocks, but also get better use of capital and also provide better dwelling stocks and dwelling or rental management. The research on this is fragmented and limited, but there's a couple of things that you can draw out from looking at what's actually going on at the moment without full evaluations of those things going on. Certainly it's brought institutional investment into the housing market. What it does need, however, to take off is not just new asset classes and sympathetic regulatory settings, which it does. So it's not as though government is not involved in this. There's quite a lot of stuff that has to happen, but it also needs very patient capital if it's going to actually succeed. And the outcome of all that, and it's quite explicit in the BTR sector, is that these rental units are very directed to premium products for high, moderate and higher income, actually higher income households. This is not a source of new builds into the lower market, into lower income household families. And indeed, there's quite a lot of mechanisms to actually present build to rent solutions, apartment solutions, as something that will exclude those people that are seen as difficult, low income, not like us. So it's really taken that group that is currently in home ownership taken them into the rental market and supplied them rather than anything else. The last thing that we did in terms of this is we did some work on housing precarity, because what does all this stuff that Ian's talked to you about and what we've talked about in terms of these different ways of trying to generate better housing, more affordable housing, particularly within the rental market, what does it really matter? And I think it really matters in a number of ways, but it's not just about housing deprivation, which we often focus on, and homelessness. It's also about precarity. It's about the inability to be certain about your future and make decisions within the rental or an ownership market that will give you security over the long term. And so what we know in New Zealand is precarity, that inability to get secure housing, the inability to be certain about the markets that you're dealing with and the outcome of your housing investment or your consumption of housing. The burden of precarity falls greatest on renters, but it's not only on renters. And in fact, the work on intermediate housing markets absolutely show that. Those that weren't precarious in the past are precarious today, and that is creeping up the different income groups. So what the precarity research, which is now just starting to look at housing, has shown us is two reasons. One is that we tend to use precarity as really meaning housing deprivation. This is a bad thing to do, so please don't do that, because precarity can affect people by the insecurity, lack of agency, lack of certainty. So it affects people's decisions. People in seemingly decent housing now may also be in precarious housing. So, and we can see that by the churn that goes into housing. But what the literature says is that housing precarity creates social marginality and it suppresses economic engagement. There's a view, for instance, that homelessness is caused by unemployment, but actually the literature is increasingly showing that it's a lack of housing, homelessness, it can actually destabilize your position as an employee. And it certainly does so with younger people. So there's a whole sort of set of issues around managing housing risk across the life trajectory. And one of the problems that we found internationally, and it's true in New Zealand, is the over-targeting of housing assistance tends to be counterproductive because it doesn't get the structure of the housing system right. And so what we do is we've turned housing into welfare, and that doesn't deal with the issues that Ian has demonstrated in terms of the intermediate housing market. And you can see that short report among the material that's on site. So I'm going to hand back now to Ian to do a quick summary, and then he's going to do whatever he's going to do.
Thank you, Kay. I thought it was going to be a joint summary, but that's okay.
I'm right here.
That's good. So certainly the housing system settings that we've had over the last 27 years has resulted in some extreme private rental market outcomes. There's certainly an urgent need for supply side solutions for private renters, particularly those with incomes and income quintiles 1, 2, and 3. And there's certainly no silver bullet answer sitting out there available for people. Certainly, the majority of the current support is via the accommodation supplement, and this is insufficient to meet these households' needs. We need some long-term transformative change, and we need continued work around increasing the supply of development-ready land, which this government's been focused on. And we also need to continue work on reducing the impediments to increased supply. One of the challenges facing the construction sector is the volatility of demand over time. And so a population growth strategy would be advantageous, which at least tries to manage the level of net migration gain over time. We obviously need an inflow of migrants, but it's how many and how quickly. And although it's be very difficult, we should at least perhaps attempt it. We also need some debate around what a good housing system would look like and how we want to get there, and how we're going to monitor whether we're going to make any progress, and monitor whether we've made any progress in terms of our shift towards that. But some targeted support to increase the supply of affordable units for low to moderate income renters would be helpful, and probably, as we've seen, it will require some degree of bipartisan support. Kay, would you like to add a couple of comments?
I would just say on that, Ian, is that for some of you, you may be aware of the Doors for Dignity, which focuses on seniors, particularly seniors who are increasingly locked into the rental market. And that launch in Wellington. It had already been launched in Christchurch. It's been prepared by Christchurch Methodist Mission. Fantastic stuff. Look it up if you can. Was actually hosted at Parliament by 4 political parties: the government, Labour, New Zealand First, and the Greens. And for the first time in my memory, we had ministers and shadow ministers getting up saying that this can only be solved by a bipartisan approach. Our problem, I think, is to generate the pressure which actually turns that from words into actual response to the problems that the housing system has.
Thank you very much.
Do you want to open up?
Yeah. Do we have any questions people would like to ask?
Yes, Ian, there are a couple in the chat. One was a clarification. Rosemary Goodyear asked, how do you measure stress? That financial stress I had put in, that I thought it was households paying over 30% of gross household income. Is that what you've utilized?
Correct. Yes, that's right.
Thank you. And then in terms of that last conversation about kind of where do we go from here, what kind of support, Paul Gilbert has asked, could you expand on how we as a civil society can best respond to the growing and obvious limits of adequate market responses to persistent unmet housing needs? So, I guess what is it that we can all get on with while those larger system changes are coming into place?
Well, thank you very much for that question, Paul, I think. I'll have a go. I think there's two aspects to it. First, policies that are going to drive long-term transformative change will take a while to have a significant impact on housing outcomes. So in the short to medium term, there's a range of policy responses that could be adopted to try and grow supply, working with organisations, either whether they're in the community sector or the private sector, to try. But I suppose one of the unfortunate truths about trying to grow the supply of affordable housing is that, as we mentioned right at the start of the presentation, is that the returns that are generated from new developments in affordable housing space are relatively low. And so it's how do we what changes in the structure that we can we put in place to try and improve those returns. Okay.
Thanks, Ian. I think there are, in my mind, there's a number of things that we have to do. One is actually a paradigm shift, and that's moving our view around housing as something which is housing is not welfare, but it is investment. And that actually affects a whole number of households, irrespective of income. But obviously, unmet housing need is most prevalent in those on low incomes or those stigmatised within the market. So I think that's a housing shift, which says we can't deal with this in terms of our current array of tools, which are primarily demand-side tools, the AES or KO's income-related, and some CHIPS, income-related rent subsidies. So we need to actually change the demand-side menu, if you like, from just those two things, because it hasn't worked and it's not going to work. And actually, we knew that in 1996. The second thing is that in doing that, we need to look at the system as a whole, not simply households, but we can't forget that households are the consumers. So we need to understand that. So everyone should be putting in some comment on the current idea of getting rid of the census and the claims that the replacements will work. The next thing is, I think that we need to have a much more focused attention, not only on some of the dynamics around population, very important, but also the dynamics around the stock and the retention of affordable housing. There is no policy around retention, and the way in which that tends to be handled is by either hoping that CHIPS and some private landlords will hold on to their stock, or KO will retain an affordable housing stock. Those are very fragile things. There are other ways of doing that, There are other ways to produce affordable housing. So I think we've got a number of things that we can do. And I guess the final thing I would say is the homelessness is an outcome of a system failure, not a market failure. Markets reach their limits, and that's all they do. Someone has to make a return about it. The system needs to ensure that where the market can't be, there are ways in which, A, the system can be encouraged and incentivized, but also that we're going to provide into households that actually have persistent stress. And one of the problems that we have is because it's so, homelessness is so awful, it's such a humanitarian problem, we can get caught up in that, but it doesn't mean that we transform the system. So we actually reproduce the conditions which lead to homelessness rather than generate the conditions that would expand housing solutions, which again comes back to the issues that Ian was talking about the intermediate housing market.
Thank you. Another question came in from Richard Deacon, asking if you could expand on the population growth strategy point, please.
Yeah, thank you, Richard. I suppose the over the last decade or slightly longer, we've seen a large fluctuation in the level of population growth over time. From, I suppose, in recent times, we had net migration gains of around about 140,000 people in a year, and within 18 months, it's dropped down to less than 10,000. And from a construction sector point of view, suddenly the demand for additional dwellings has gone from needing approximately 50,000 houses to house the migrants, falling down to 4,000 households to house the migrants. And obviously that has a huge impact on both the demand and the distribution of demand across the country, which then flows through to prices, the development feasibilities, and a consequence, the viability of development businesses. And so over the populations, over I suppose a cycle of 10 years or more, if you have these large fluctuations in population growth rates, it has a significant negative impact on the construction sector and our ability to provide or build new housing. So if there was a strategy which we could smooth that population growth over time, it would probably be very advantageous to the construction sector.
I totally agree with Ian around this, that we're very bad around population analysis, both migration, new settlers and outgoing, but also in terms of understanding the aging population. But another thing is understanding household formation and family composition and household formation. So I just say, and I just reinforce what Ian's got to say, and I've said this before, housing is not ice cream. You can't decide we're going to swap from raspberry ice cream to strawberry ice cream because we all suddenly developed a taste for strawberry literally overnight, which actually, if you're in the manufacturing ice cream market, it might be a bit difficult at the moment with the pipeline supply issues, but you can effectively do overnight. You can't do that with housing. It's tied into skills, it's tied into investment patterns, it's tied into the acquisition of land. It's a complicated engine, but it's an understandable engine, and yet we ignore that when we look at our migration policy in particular, but also our policy around how do we want our households and our families to be supported in housing markets.
So my comments around population growth, I'm not saying we should have no net migration or we should have really high net migration, but we should have a strategy around what we see as the desired range, a bit like an OCR effectively, and try and manage it within that range to take some of the ups and downs experienced by the construction sector out of the equation. Chris, any other questions?
None, but I'll stall for time to give people a chance to type anything else and just ask. So you've done a remarkable amount of research and definitely want to dig into some of the detail more. And where can the listeners find those?
Thank you, Kay. The last slide, yes. So all these reports are available on BRANZ's website. Reports numbers 1 to 6, and we also have some research updates, which are very high-level summaries of some of the key aspects of the project, which I'll send out to our invite list as well.
Ian, I should know this, but I don't because I haven't asked you. Are people going to be able to get this presentation available? Is that available to people?
Yes, Chris has been carefully recording it for us, and it will be available on a website, Chris.
We'll have that up on our YouTube channel, and
Right.
then also be distributing information and links out through LinkedIn, so people can find it that way also, that weren't able to attend.
Thank you, Kay. I've forgotten that part.
Almost like we practiced some of this. Nothing else has come in terms of questions right now, but I'm sure, and looking at some of the people online, they know where to track you down. But if the audience that's remaining, which is still pretty handy, it could join me in thanking Ian and Kay for their presentation today, and to continue the work that you've done for many years in shining light and insights onto how our housing market and housing system are performing in Aotearoa, New Zealand. It's much appreciated.
Yeah.
Thank you.
And then I will go ahead and close us this afternoon with karakia. But again, thank you all for attending. Hope you found it interesting. Do take a look out for the recording and for the slides that will be available. With that, kuamutu o mato mahi, no tine wa, manakitia mai mato katoa, o mato hoa, o mato whanau, aio ki te aorangi.